Is getting mortgage pre-qualification same as pre-approval? We'll find out now. Hello, welcome back to my channel. This is Sushma Khinvasara and I'm a real estate agent in the Toronto area. Many home buyers, especially those buying for the first time, thinking getting pre-qualified for mortgage is same as pre-approval. But is that really so? Pre-qualification and pre-approval are two terms you usually encounter when you go home shopping. However, many buyers think that these two terms are the same and even use these terms interchangeably. If you are looking to buy a property, there are important differences that you should understand. Knowing basic distinction between pre-qualification and pre-approval will help in your home buying decision. What is pre-qualification? This is the first step you need to take if you are considering buying a property or even if you are just testing the waters. Mortgage pre-qualification can be done over the phone, online or in person, and it gives you a quick estimate on how much you can expect to borrow from a lender. For you to get pre-qualified, you need to give the lender or mortgage agent your overall financial picture. It includes your income, assets and debts. There are things you might want to keep in mind, though, as you provide your financial information to the lender. First, income is not only about your regular paycheck, but may also include other regular incomes, legal payments like alimony or child support, other benefits and investment returns. Second, lenders are mostly interested in liquid assets only because this can be turned into cash quickly, such as savings account, stocks and money market bonds. Third, if the lender asks you to estimate your monthly debt payments, you can include monthly payments of all debts such as credit cards, term loans, student loan or car loan. The lender will then review the information you provided and provide you a ballpark figure of how much you can borrow. Because pre-qualification depends solely on the information you provide and does not require a thorough investigation. It just gives you the amount you might expect to be approved, but does not guarantee that you will be approved for the same amount. There is no need to hesitate in getting pre-qualified because it has no effect on your credit score and it has no cost. But knowing your pre-qualification loan amount is not enough and you might not be taken seriously by sellers unless you have been pre-approved. What is pre-approval? This is the second step and the one that will grant you a conditional commitment to a mortgage. Unlike the pre-qualification, pre-approval takes the process to the next level because it involves a thorough investigation of your income, assets, debts, credit history and rental history. The lender will still want to know your income, assets and debts, but this time they will ask for proof. Some of the documents that you might be asked to provide are identification, proof of employment, tax documents, bank statements, credit information, real estate and other assets, and monthly expenses. The lender will then verify your employment income, assets and debts and will analyze your credit report as well. If you meet all the requirements, you will be given a pre-approval letter which states the amount and type of mortgage a lender is willing to offer. It is important to take note. This loan commitment might be conditional on the terms provided by the lender. It is possible that different lenders may have different interest rates and conditions. You might want to shop around and talk to several lenders to make sure you're getting the best mortgage product for your needs. Best way to do that is to contact a mortgage broker. They have access to a wide network of lenders and can get you the best rates and terms. You are not obligated to get a home loan from the lender who pre-approved you. The benefits of getting pre-approved is that you will know what is the maximum amount of mortgage you could qualify for making an estimate of your mortgage payments and lock in an interest rate for 60 to 120 days. Depending on the lender. You can use the pre-approval letter as an advantage when making offers on homes because it indicates that you are a serious buyer. The other benefits of getting pre-approval is that you won't waste time looking at homes that are beyond your price range and help you to close in faster in a competitive market. Which one should you get? If you're a first-time home buyer and not sure yet if you're ready to buy, then it's better for you to get pre-qualification. This does not affect your credit score and does not have many requirements, but will still be able to give you an idea about your financial readiness in getting a home. Now, if you're seriously considering buying a home and ready to buy within the next 3 months, then the best option for you is get the pre-approval. Having a pre-approval letter is especially helpful when the housing market is hot, when homes are sold faster within hours or days of being listed. If you're confident with your financing, you have an advantage over other buyers. In conclusion, getting pre-qualified and pre-approved for a mortgage both give home buyers a good idea in advantage of how much they can afford for a home. However, most sellers will be more willing to negotiate with those who are pre-approved or ask your real estate agent which of the two is acceptable to home sellers in your market, so that when the time comes for you to make an offer, you'll have what you need to give the sellers the assurance that you'll be approved for a loan. I hope you like this information. Thanks for watching this video. See you next time.